Throughout life, we're often told, think bigger, aim higher, right? Sounds great. When it comes to trading though, that can often be the very thing that causes you to come unstuck quite rapidly if you're on leverage. The guy I'm talking to today, in today's episode, it comes a bit late, you'll notice the different haircut. I got held up with technical issues. He started out right from the beginning, very grounded. Not the aim higher thinking, just I'm going to use my trading profit for student fees, going out now and then, and so on. And then he'd run down his account. He used it as a source of income, not some big investment thing that he could say, oh, I've now got this trading fund that's like 100k, 200k, whatever. No, not for him. No leverage, no options, just keeping it grounded. Stocks. And over time, he did very well. And he continued through his 20s and 30s building up what he'd learned and the money he was making, diversifying his portfolio, but keeping a varied life. And I think it's what makes this episode interesting. It's an example or a portrait, if you like, of a trader who hasn't sort of gone all in on the, massive leverage or big trades on amassing various prop firm accounts and so on. No, he's preferred to go steady, build up a portfolio, build up other businesses while he's on that, and do very well without stressing over 8 hours, 10 hours a day on his computer, looking at charts, what have you. So he's got a very measured sort of way of approaching trading, and always has had. And it's an interesting portrait, I find. So see for yourself, see what you think. Kevin Steuer.
Kevin, how are you doing?
Good, thanks for having me.
Tell me where you are.
Just outside of Charlotte, North Carolina.
Yeah, and I'm in London. You've been trading for a while. I mean, you were interested in stocks. I seem to remember in our first conversation, you said you were looking at, investing, I suppose, in your teens, and then you went on quite some time later to actually start trading. What made you make that step from just passive, if you like, investing to something more proactive?
Honestly, my freshman year of college, I was in college when the great financial crisis hit, and a lot of the colleges here, a lot of their investment plans got hit really bad, and as part of that, a lot of their financial aid dried up. So all of a sudden, I was looking at taking out, a lot of student loans, which I didn't want to do. So I started trading more when I was in college, just to try to, keep my debt level down, have some walking around money, and just, try to stay as cash flow positive as I could without having to work, a part-time job while I was taking full-time classes. And that continued on. I went to grad school, and that's trading paid and put me through 2 years of grad school. So that paid off all my student loans, didn't have any debt. And then I just kind of turned from a hobby to a secondary kind of income to now it's just kind of like a consistent thing.
You also have another job though, right? What's that?
Yeah, I do a couple different things. So I'm the managing partner at stockta.com. I'm not the inventor of it, but it's a technical analysis website built in 1999, and I bought it 2 Mays ago, right around the time my son was born, and spent all last summer, and I'm still spending time just recoding it, reformatting it, trying to make it, as accurate as possible. And then I recently partnered with Global One Media to help me with that endeavor. So I work with them on a lot of different stuff, and then I also cover some stocks for Don Durrett at goldstockdata.com. So I stay busy doing a couple different things.
Yeah, for sure. So when you first started trading, was that swing trading, given the fact you also were doing classes and what have you?
Yeah, I didn't start out that way, but that's kind of what it turned into, just because I was just trying to generate cash flow. Like every semester, I was trying to, hit whatever goal was in my head for, paying for school and having some adult beverage money and some meal money and, just life.
So what sort of capital did you put in at the beginning?
at the beginning, I can't remember what brokerage account I had back then. They got bought out. But I remember I used to basically take my account down to like $1,000 or $500 after every semester and basically start from scratch because I was just, trying to cover bills and not have to deal with taking out loans and whatever. So it was, trying to 5x my account in 6 months or 10x my account, whatever it was. And it, depending on the time, like during the great financial crisis, that was pretty hard. And then after that, when he had the recovery, it was a little easier to kind of pick and choose. And that's where you don't want to confuse, brains for a bull market, because sometimes you just get lucky. And I mean, this past couple months, like you could basically throw a dart at a board and pick a stock and you're going to have a winner. So I think it's when it gets that easy, it's kind of when it gets dangerous, and you got to really, stay disciplined and stay within your process, because a lot of things in trading are just completely outside your control. So once it gets outside your control, if you have a bad process or you're just unlucky, things can go the other way on you quick, and that's when, you blow up your account, unfortunately.
Sure. And what is your process?
I do a macro down. I look at, I'm more a numbers over narrative person, so I'm mostly technical analysis with, keeping an eye on the news and watching out for whatever Trump tweets at a random time that could, either make the markets rip or tank. So I mean, I look at the VIX, I look at the 10-year, I look at the Move Index, I look at, the major indexes, SPY, Dow Jones, Nasdaq, IWM, like, start there. And then, I just look for relationships, between, big one's the dollar, right? Like you got to get the US dollar right from a macro perspective. So looking at that, and then looking for correlations between, the US dollar and gold, or gold and oil. I mean, if you've been trading oil this year, you've probably had a really tough year. If you've been trading gold this year, you've had a really good year. So I think it's just kind of identifying those trends and looking at those correlations and relationships, and just trying to, you know, I always say I try to make the system work for me, because if the system's not working for me, I'm getting worked by the system. So I think it's, trying to balance all those different things. And, I don't use leverage. I don't do options. I don't do margin. Like I keep it pretty straightforward. And I always tell people, like, when I'm looking at charts and I'm looking at stocks, it's those, whatever ticker I'm looking at, it's interviewing for a job in my portfolio. So if I have to put on 1,000 indicators, or like make the chart, if I have to work really hard, I probably shouldn't buy it, right? Like it should be a clear cut, you're hired. Like if, my company now, like when I hire people, I don't want to hire average people. Like I want to hire great people, because they're going to make my company better. So I want to hire great companies to make my portfolio better. Because if you're just chasing average, you're going to get stuck in a company. It might be great 6 months from now. And if that's your time horizon, right? Like everybody has a different time horizon. And there's some stuff, like I have multiple trading accounts. Like I have one that's kind of a longer term retirement fund. I have stuff in there I probably won't ever sell, unless there's like I see a COVID crisis coming, or great financial crisis coming. But like that stuff, the time in the market is going to be timing the market. The swing trading stuff, I'm just trying to kind of chase some momentum, and, avoid the drawdowns. And, if I can hit singles and doubles consistently, and then I have a couple home runs, that's great. I just want to avoid the 20, 30, 40, 50% drawdown. Because once you do that, you mentally get in your head, you start pressing bets, and eventually, the house is going to win, and you're going to walk out of the casino with nothing.
Have you ever been in that situation where, your drawdowns just got too big and then you start making mistakes and it really starts to unravel?
Thankfully, not lately. I think thankfully I timed COVID well, where I sidestepped that big drawdown. And then my portfolio did well with that whole rally after. It was then when I kind of got a little outside my system, and I kind of confused, brains for a bull market, and I started taking on riskier plays. And I either did some private placements that I didn't love, but everything was going up, so it just seemed like it was, too easy and it was easy money. And I had one of those blow up, and thankfully it wasn't a significant amount, but I haven't done a private placement since because it just left a bad taste in my mouth. It was a company. They were Explorer. It was a gold company. I didn't love the project, and working for Don, I have, I'm not a geologist by trade, but I have a pretty good understanding of, how those numbers work. And I didn't love the project, and but the marketing team was good behind it, and I thought they were going to be able to, kind of sell a story. And I was hesitant about it, and when that old phrase of if you have any doubts, then there is no doubt. Like I shouldn't have done it, and I knew I shouldn't have done it, and then I did it, and then I had a dinner with a group of other investors maybe 6 months later with the CEO. I remember leaving that dinner. I'm like, that is the most expensive steak I ever bought because I'm never seeing that money again. Like this company's going to zero, and they eventually did, and that was to date probably one of the biggest draw. It probably is the biggest drawdown in 10 15 years of trading, however long I've been doing it. But I just kind of remember you know thinking that a good story could overcome a bad project or a mediocre project. It wasn't a terrible project, but it wasn't one that moved the needle, and they were trying to sell it as something it wasn't. And I knew that because I knew that sector really well. But I thought, oh, the average investor may not know. They'll get the hype train behind it. It'll run. There's a good chance I could, double or triple my money here, and went the other way on me.
How much did you lose?
That was probably, it bounced a little bit and I held on to enough to recoup some of my money, but that was probably 10K around there.
Nasty enough. Yeah.
Yeah, like didn't blow up my account, but
No.
definitely leaves a sour taste in your mouth.
Yeah. You mentioned that you don't use leverage. How come?
I just think there's so much leverage in the system that I think you really got to be on your A game, and you really got to be glued to your computer if you're going to play with that. And, I don't trade every day. I don't want to be glued to my computer screen every day. Like I got a almost 2-year-old at home, and, I like to do stuff outside of work. So I don't ever want to put myself in a position where I'm constantly stressing about my portfolio or feel like I have to be checking the news, or, you know, if you're losing sleep at night over one of your positions, you got too much money in it. So I just don't find the risk reward setup. I know it works well for other people, and if that's your thing and you do well with it, that's great. For me, it's just not worth the risk reward. Like I'm not trying to get rich overnight. I'm just trying to compound my wealth and, build a healthy portfolio so when I retire I can live comfortably. Like I'm not trying to go out and buy a Bentley tomorrow, or, spend crazy amounts of money. Like I'm a pretty simple guy. Like I want to keep my stress level low and just kind of enjoy life.
Yeah, totally. I understand that. Yeah. And so when you talked about processed, but didn't go into much detail as to what you're looking for. Are you, for example, looking at the sort of cup and handle structure? Are you looking at certain kind of breakouts? What is your favorite pattern or couple of patterns that you're looking for?
Definitely look for that. To be honest, I mostly just use my site because that's why I bought it, because I believed in it. So I go on StockTA, I look at different tickers that I'm either interested in or already own, and basically I just keep it simple. Like I look for a bullish trend or something that's going from a neutral trend to a bullish trend, and that's usually when you get those kind of patterns that you talk about when something's about to break out. So it does a really good job. It measures and maps a whole bunch of different stuff, does all those studies, and it spits out a trend score number. So I look for a trend score number that's increasing, because that means there's a better chance of it breaking out. And then we have a confluence system, and confluence just a fancy term. Basically, where it means where things meet. So if you run all these different studies and they all meet in one spot, there's a greater chance that that's a true pivot point. So I look for those spots, and that's what my algorithm picks up on. And I look for stuff that has not a lot of overhead resistance. So you're making, asymmetric bets. Like I don't want to bet a ton of money if it only has 1% upside or 2% upside. Like I'm looking for, something that could be 5, 10, whatever percent. And then I scale in and I just watch that trend score to see if it's increasing or if it's decreasing. And if I'm long something and it pulls back and it hits major support and it holds, that's usually where I scale and add more to my position. If that support doesn't hold, that's usually where I start to scale out of a position and take some of my chips off the table. And you know, that's what I would say has been the hardest part this year is some of these moves and some of these stocks have been so drastic so quickly. It's hard to scale in, and then you try to stay disciplined so you don't chase. But some of these AI stocks since May, some of these nuclear stocks, gold and silver, like some of this stuff has been just overbought for months.
Yeah,
Using
where
my
do you get
system.
in?
Yeah, like you look at the charts and you're like, man, like this stuff is so stretched. So you don't want to chase, but that FOMO kicks in. And you're like, oh, do I nibble here? Do I? And it's been hard. Like the first part of this year was really tough to trade. Like I'm usually like I've every year, lifetime trading. I'm definitely over 50% win rate. For a while, I've been over 60%. And then the start of this year, I started the year out. I was like 3-15 or 3-20, and it was all the tariff stuff. Like there's just so much uncertainty, and the market hates uncertainty, right? Like it, you want to have a clear picture. Everybody wants kind of smooth sailing, calm seas. And the beginning of this year, it was just so crazy back and forth. And after a while, I'm like, you know what? Like, I don't think I traded all of February. Like, I think I just stepped back and watched and waited. And then, you pick your entry points. And then I did well. And, lately I've had a really high win percentage, which has been great. But again, don't confuse a bull market for brains. And my system started giving me some signals last week. So like Monday, I started to sell some stuff. Tuesday, started to sell some stuff, and then I think Wednesday by lunch, I was like 80% cash in my main like trading account. And then Friday, we had the whole China tariff ramp up, and I only watched the market until noon, and it was down like 500 points at noon. And then my son and my wife both got sick. So I picked my son up from daycare, and I didn't check the markets the rest of the afternoon. I was busy taking care of them, cleaning the house. And I didn't check the markets again until I think like Saturday night when they were both in bed. I finally sat down. I'm like, all right, what kind of happened Friday? And I'm just looking at the charts and I'm like, holy smokes, we had a 900 point day, like down, like Bitcoin smoked, like all these different things. And I'm like, I was glad I got out, and that was just staying within my process. And I just read the signals and I follow the system. Like I try not to be smarter than my system. I try not to front run it. Like if it tells me do this, I do that. And it's not a get quick rich scheme. I'm just trying to protect my wealth and just compound it year over year.
What is your prognosis, if you have one, of where we're going in terms of stocks? We've had this amazing bull run, and all through that period, we've had experts talking about, a massive crash, 1929 style. Do you feel that's on the cards, inevitable?
I've never been a great one at predicting. Like I just try to trade the market I have now. I mean, right now, I still haven't traded anything since last Friday, just because I can't get a clear signal. And I was looking this morning, and a lot of the Magnificent Seven stocks in my algorithm are neutral or bearish. And it's like the top 10 companies in S&P 500 make up like 40% of the S&P 500 market cap. So you have a really concentrated trading system right now, and everybody owns these stocks, whether it's your trading account, your retirement account, your pension fund. Like there's just so much cross pollination. So when you have that level of concentration, and then you have kind of the geopolitical news we've had, I think you just got to be careful. Like I've been watching Nvidia's been flipping like right on that flip line from bullish to bearish. Google's still bullish. Amazon's still bullish. Tesla's been bullish just because it jumped recently. Oh, sorry. Amazon went bearish the other day. Meta went bearish a couple days ago. Netflix went bearish, I think, yesterday or the day before in my system. So you look at, what's typically been the driver of the market since that COVID correction. I'm just getting some warning signs. And I don't know where, like, I try to rotate sectors or rotate my money. So if tech's, slowing down, I might rotate into gold and silver, but I don't want to chase here. You know what I mean? So it's like I'm kind of in just, I have my trading journal, writing it every day, reading it every day, and I'm just looking at my notes the past couple of days. I'm like, I don't know where to go next. And that's not a great place to be, but I would rather be there than have my money in the wrong place and I'm down 20-30% because of Friday's crash. Like, I don't know how many people, I don't know if Friday panic selling was the right move yet. Like, maybe it was, maybe it wasn't, because we had a little bit of a bounce Monday, but it didn't make a higher high. Like, it failed at some key resistance points. So I'm just kind of waiting to see to get some clarity. Like, is this China trade war thing for real again? Is it fake news? Is it whatever? Like, it's just, earnings have been good so far, which has been great, which makes me think, maybe this is just a small blip. But I've had a really good year in all my trading accounts, and I really don't want to blow up my account because of a 2-week panic. And now's like when we could see that. So I'm being a little more cautious than normal here because I do see some opportunities in some sectors, but I do see a lot of risk and a lot of things that I'm like, ooh, I don't know. I don't know if we have all the pieces to this puzzle yet. And I don't want to start, making moves and I get caught offside really easily here.
Yeah, yeah. And oil's going down. Looks like it could even hit, I don't know, $43, $44.
I was on a podcast last night. We were talking about oil. Like, if you look at that chart since that COVID rally, when it went from $6 to like $106 in like 3 months, it's been in a really bad downward sloping channel, just consistently making lower highs and lower lows. And yeah, I mean, I don't know if 50 is going to hold. And that's a dangerous place to be considering the geopolitical reasons, because Trump's trying to punish people, right, for buying Russian oil on the black market. Okay. Is he doing that to protect the Permian producers? Because their break even costs, some of them are, the real good ones are up to like $66, $68 a barrel now. And the bad ones are $74, $75 a barrel now. So they're not going to keep pumping to lose money. So if those wells go offline, then eventually there's going to be less supply, right? And cure for low prices is low prices, or cure, you know what I mean? Like that old saying. So I don't know. Oil's just been really tough to trade. I was looking at my notes last night and I'm like, there's been like 6 or 7 false breakouts in oil this year. And I've traded them, almost every one of them, because I'm like, oh, here it is. And you don't want to miss it. And I think I've traded oil like 7 times and I'm 5-2, but my gains are like 2 or 3%. And my losses are small because I kept my stops tight, but not where I should have put my money. Like the opportunity cost to go there over something else probably hurt my portfolio. If you add up those 7 trading opportunities or 7 segments of time when I made other trades, my money would have been better off deployed somewhere else. So I'm watching oil right now, and I don't think I'm gonna touch it the rest of this year just because I haven't been lucky with it.
I was looking at the weekly this morning and I just thought the way it's arcing down, its logical finishing place is around about $43.
Which is crazy to think of,
Yeah,
right?
yeah, yeah. But that's the way it's looking, just purely from a technical point of view. Never
And
mind.
it's weird looking at like energy demand as a whole is through the roof, right? And you normally think energy demand, oil. Oil's the first thing you would think of.
But uranium's going up.
It's been uranium. I mean, natural gas had a little bit of a rally, and then that's the Widowmaker trade. People got smashed in that when that, mean reversion, and that's always tough. But you look at, there's been other areas of energy that have carried energy this year. So it's just been a weird year with that. And, I traded uranium earlier in the year, but again, some of these uranium stocks, like I'm not a huge value investor, but I think you do need to mine some of that. And just the valuations on some of these companies, I'm like, they haven't gotten anything out of the ground yet. Like, I know you value them for the ounces in the ground, but that's not pure profit. Like, by the time they do the environmental studies and the permitting and get permission and build it and build the processing plants, and like some of these companies won't be they won't be producing cash for 3, 4, 5 years, and they probably won't be cash flow positive for 5+ years.
And that's when they start coming down.
It's an interesting setup right now, and that's why I'm kind of like, I don't really know. Like, There's some cybersecurity plays that look okay, but again, those have run up. So it's just a really weird time with the market, and I'm just kind of like, you know what? Like I'm kind of okay just sitting still because I, I'm not right every time, and I don't want to get a bad read here.
Yeah, I like your attitude because I think staying sort of not not too ambitious, if you like, kind of cautious, but just taking your time, being guarded against the unexpected, because the bubble, as they call it, it obviously is only going to get bigger and bigger the way things are going. So your risk logically would be getting higher. So
Yep.
it does make sense to be more, just take time out when you had a sell off like last week. Just go right. Well, not just straight back in there, but let's just watch it for a while. I mean, a lot of people will go back in, and you think, oh damn, I should have gone back in, and I just missed an opportunity. But when it goes down and then people push it up higher very quickly, it can often come down just as quickly. You
Yeah,
get
because the
caught under
chart
it.
gets blown up. The structure of the chart just doesn't look
Yeah,
good. And I had, you know, I'm in a couple different group texts with people who trade, and we try to help each other because this is a really hard game, right? Like you're the best traders in the world have a 50 like 1% win rate. So like you got to be mentally tough. You got to have a good process. You got to adapt because the market's always changing, and that makes it hard. So like I text all these different people, and we're always bouncing ideas off each other or talking, trying to help each other. And when I told people I was like 80% cash by Wednesday at lunch, people were like, "Are you crazy? Like this?" And I'm like, I just don't love it, right? And I had conviction in my beliefs enough that they didn't talk me out of it. And then Friday they're like, "Oh my God, like we wish we would have listened to you." And I'm like, I wasn't telling you guys to sell. Like I don't like telling people what to do because everybody's situation is different, right? Everybody's goal is different. Everybody trading style is different, right? Like I think you got to find the trading style that matches your own personality and your own goals. Because if you have alignment, then you can do really great things. But I think some people are just misaligned from the get-go, and they either don't know themselves, don't have a process, don't have a goal, and they're just like, "Oh, I'm just going to try to make as much money as I can as quickly as I can." Okay, that's gambling. That's a casino.
yeah, yeah, exactly. Yeah,
Some of those people were texting me Friday like, "Oh, you were so smart getting out." I'm like, I don't know if I was smart. I just listened. Like I just listened to my process. And then on Monday they're like, "Oh, you missed it. Are you getting back in?" I'm like, "No." I'm like, "But I don't know if that's the right move. I could be missing a monster rally today." And I was watching the market go higher, higher, higher Monday, and then I lost some steam. I was like, "Okay, like I should still sit and watch here." But it's hard. It's not easy to do that. Like it's especially when you just have a pile of cash sitting there and you're like, what do I do with this? Because it's not, even if it's just in a money market and it's getting 3.8% or 4%, like that's nice. But when inflation's 5%, you're not getting ahead in life.
yeah. And one thing we talked about, we touched on, I should say, really, when we first spoke, was when I looked at the charts Thursday, Friday morning, UK time. This is just before the big sell-off that you're referring to. I looked at the Nasdaq and it looked like it was going up still, but when I looked at individual stocks, especially the usual ones that I go for, the cheaper ones, and especially the AI, if they've got a good pattern that suggests there's more upside, I noticed quite a few of them were either selling off or beginning to lose momentum and so on, and it helped me avoid the big splash, in the afternoon. And I think for people listening, if you're trading the indices, it might be a good idea to every so often dip into that index. If it's Nasdaq, you're looking obviously at tech stocks, and perhaps look at the cheaper stocks as well, from say I don't know $7 or $8 to 25, something like that, as well as your Teslas and Amazon, and get a, because I think that gives you a bit of an indication.
A more micro view.
Yeah, kind of,
Yeah.
yeah, and it's sort of, if they, if you're looking at say an average of 8 or 9, and 6 of those are looking a bit tired and even selling off, then that's grounds I find to be at least cautious, and
Yep.
just see where things go, rather than, oh, I'm off on the Nasdaq again today, because that's the risk you run. That I mean, okay, you could put a stop loss in, but still a drop like that is
Could
you know
run it. Could gap down before the open, and your stops don't work.
Yeah, that's another thing. A drop like that, it's just a guillotine, isn't it? It's not
Yep.
one of those ones where you have some time and you think, no, this is not looking good. You're at lunch and then you're back from lunch and it's like just blood everywhere.
And that's the old phrase. It's, escalator up, elevator down. And, you get
Exactly.
this nice slow ride up, and then all of a
Yeah.
sudden the bottom falls out. And
Yeah.
you're like, why did I just wear a 15% drawdown when I was up? I was up 8%, and then it went 15% the other way. Now I'm down.
Yeah.
Like, what do I do
Exactly.
now?
Mm.
But no, I think that's a great point. I mean, that's part of my process too. I didn't touch on earlier. Like, I look at all that stuff, and then on the main page of my site, I have kind of the bigger indexes and the Mag 7 stocks. Those are the most popular stocks, and I call it our dashboard. So if it's bullish, it's green. If it's neutral, I think it's in orange or yellow. And then bearish is in red. So I get a quick look at all those, and I see, what's bullish, what's bearish. And then we have a sectors page on a different page, and I look at that sectors page. So like energy's just been red like all year. Gold, silver has just been green all year. And I kind of look at that macro view and I'm like, okay, like, you know, healthcare could be breaking out, or tech could be breaking out, or discretionary could be breaking out. And then I look at that, and if that chart looks good, to your point, now I go and I say, okay, what are the top 10 holdings of that ETF? And if I really like the setup and I want to play, that's how I kind of play with leverage. Like the ETF might only move 5 or 6%, but the biggest holding in that ETF might move 10 or 12%. So like that's how I kind of look at it. Like I trade ETFs a lot, but if I want a little more juice on whatever trade I'm putting on, like you can buy the GDX, but if you want to really buy like a mid-tier miner, that mid-tier miner might be up 50 to 80% this year, and the GDX is up 30 to 40 or whatever it is. So that's in my process of doing things, that's kind of how I play with a little more leverage without using leverage, if that makes sense.
Yeah, I see what you mean. Yeah, for sure. Yeah. And your system that you were referring to, does that go from green to red? I mean, it'd be quite useful to have an orange, wouldn't it? Like this is kind of turning from green to orange, which gives you a bit of a warning that maybe there's going to be a switch in that sector before you get to red.
Yes. So when stuff starts to lose signal strength a lot of times, so we look at things in different time frames. So we have a short term, intermediate, long term, and then that gives you an overall trend score. And I look at the short term a lot because I'm a swing trader, but I also want to see the overall like picture. So if stuff starts losing trend score on bullish, and so we use a -1 is the most negative something can get, and a +1 is the most positive something can get. So if you buy something that's neutral and then it starts to go to bullish 1.0, 2.0, or zero point 0.2, 0.3, 0.4, like you can visually get a number, and that's another way I view the trend strength of how well something's doing. And then once it starts to lose trend strength, it'll start going back down. And then once it gets close to zero, depending on if it's super volatile, it might go from bullish to bearish. Like a Friday, like a lot of stuff flip green to red. But like normal trading, you'll see stuff, it'll start to lose strength and it'll go to neutral. And then it can go a little bit negative and neutral before it flips to bearish. Like there's a little bit of a buffer. So that's kind of like, that's your decision time of like, is this going to bounce? And that's when I look at the confluence. Is there a strong support here where it could bounce and it can flip back to bullish? And if it's not, like if something flips from bullish to neutral and there's no confluence, like a heavy support or medium support next to it, I'm just getting out. Like I'm not waiting around. I'm not, because I can always get back in, right? Like there's no, I know for tax wash purposes and, tax loss, you got to be careful with that. But, if I made money on a stock and I get out of it, I can get back in whenever I want. There's no rules on, like I don't love to day trade. So I try to avoid, the round trips on that stuff. But, there's no reason to ride something down. And to those, I have some users who love to short stuff, which, on Friday, they probably had a great day. I don't particularly like shorting stuff anymore just because all the leverage in the system and the 0-day expiration options make it, I think, really hard. But when stuff goes from neutral to bearish and there's no support, I've seen some of my users, they're like, hey, this was great. I made 10% on the scalp short trade because I saw it flip from neutral to bearish and I front ran it. I'm like, hey, that's great. I'm glad it worked for you. Like, that's not my trading style, but if that's what you use it for and you're comfortable doing it, then good luck to you.
Is your system working on the chart itself, like giving you some kind of indication, or is it something completely separate?
A little bit of both. So it measures and maps all the price movements for the day, and then it runs all those studies and it looks for patterns, it looks for the confluence, it looks for support, and it basically does all that heavy lifting for you, and then it spits out a trend score and it spits out confluence. So I always tell people, I'm like, it does all the hard work for you. You can just pull it up and you just got to know how to interpret the data, and then you can make an informed decision on what do I want to buy, what do I want to sell. And I like it because I mean, the back end of this site is crazy. It's like 166 million rows of code, and it just runs a ton of data. So it does a lot of heavy lifting, and it spits out numbers that are just easy to understand and easy to incorporate into your process. Like, we could make it more complicated if we wanted to, but I just, one, I don't see the reason to, and two, I don't there's so much noise out there already, and trading so hard as it is, I'm not trying to put more into people's head that just, the analysis by or paralysis by analysis. Like, trading, like, it's hard. Like, you got to flip quick, like Friday to Monday. You got to make quick decisions because do you want to wear that drawdown? What do you want to do? So just trying to give people, like, do the hard work, but present easy to read and interpret data so you can make better decisions is our goal.
Yeah, your system clearly gathers and computes a lot of data. I'm just wondering, is there, if unless you're very good with fundamentals, you know what to look for in company reports and so on, that might be quite a struggle, at least time consuming. Does your system pull that data together to give you some kind of summary that,
No, it's just straight technicals from the charts.
right? So you kind of have to do your interpretation yourself. You can't.
Yeah, and
Yeah.
I do believe kind of in the efficient market theory that, most of the stuff that's known is represented in the price. And sometimes you do get those value disconnects. And then sometimes, you just have insider trading, right? Like, Wall Street's a rigged game, and, somebody shorted the heck out of Bitcoin before President Trump's tweet, and they made a lot of money. And then they went long on Monday right before he tweeted out again saying, "Oh, it's all good. That was, forget about Friday."
Yeah, there's just so much of that, isn't there? Yeah.
You can't always account for all of that, but I've gone through different phases where I am a fundamental investor, I am a value investor. Like, I've gone through all that, and just for the swing trading and what I do now, I find that just sticking to the technical analysis and using this website is kind of my go-to every day.
And do you teach at all as a trader?
No, that's something we've talked about and we might do down the road. It's just hard to find the time to get everybody together and kind of teach the system. We've recorded some YouTube videos of, like, how to and, like, explaining my system more in depth. That we have a how to series on our YouTube channel, so I think if people want to learn more, that's probably a good place to start. I've had people email me and reach out, and I'll set a call up with them and then just kind of talk through stuff. But I'm trying to. There's too many captain stock pickers in the world, and I'm not trying to turn into that. So I'm more trying to teach people how to fish than fish for them, if that makes sense. And
Yeah.
I'm afraid if I go too far down that teaching of the trading, like, I don't want to be doing too much hand holding, if that makes sense.
Yeah, yeah, and very time consuming, so yeah. I mean, talking about time, what does your average day, if you've got one, look like?
It's hard to say because it really depends. I mean, some days I don't trade. Some days I have stuff going on in my own personal life or other stuff that I'm doing for Global One or for Dawn that I don't really check the markets as often as I probably should. But I tell people, I played a lot of sports growing up and have coached a lot of sports. You need to have a game plan before the game starts. So, like, I'll look at stuff in the morning before the market opens, and I'll have my game plan for the day, and I'll check my positions, make sure they're still in a bullish trend, make sure they still got support, make sure I'm still on the right side of that trade. And I think just having a plan before that opening bell hits. So whatever time frame that needs to be for each individual, like, I have a young son who gets up at 6:30, so that means I'm getting up 5:30, doing my homework, doing my prep work, and then figuring out what trades I want to do. And then days I do trade, I really try to avoid the first half hour. I just don't like the price action. I've heard some people refer to it as like the kiddie pool for the first half hour. And you just see a lot of weird price action. So if I'm going to trade, I usually try to let the dust settle, and kind of get a read on what's going on. Cause I think that first half hour is just, there's either too many novices in trading who are just throwing money in, or there's too much narrative driven trading. And I think that's really dangerous. So, I mean, some days I won't trade till lunch because, sometimes, you'll see a dip in trading around the lunchtime hour or two, and that's when stuff dips and that's your chance to buy. So it really just kind of depends on the day. Like if there's you know, a bull market rally going like it has been this year, like sometimes if there's a weak close, that's your time to buy that last half hour before the close, because it's going to open up the next day. So you've already made money like right off the bat. And I'm not like a high frequency trader where I'm just trying to scalp and do that, every day for 100 trades, but I know people who do that and they've been very successful at it. So I think, you know, every day is different, and I just kind of stick with my process, and I wait for the dust to settle in the open, and I just kind of wait and watch and try to be patient for entries, and if I get them, I get them, and if not, I move on to the next one.
When you do your own trading session, how many will you have on at any one time on average? Could it be three or four, or more like 10 or more?
Depends on the day. I mean, I try not to have in my main trading account, I try not to have any more than 20 positions, max maybe 25, just because it's so time consuming to kind of keep tabs on all of them, and just kind of figure out what I want to do with them. So like right now, I think I have maybe 4 slots filled in my trading account. And those could be, you know, I could do trades and I just add to those positions, or I subtract to those positions. But, so a lot of my trading is either just scaling into positions or scaling out of positions. Like I'm not necessarily always opening up new positions. Like I try to, just use a hockey term here. I try to skate to where the puck's going, and I try to get into those positions before I see the momentum build. So I look at volume and see, like, as volume starts to come into stuff, like you try to front run the bigger funds. And then, just build an entry position, and then, just be disciplined on when you add to it, and then try to ride that momentum up.
Yeah, well, that sounds like a good plan. And where do you think of taking the business from here? I mean, are you just happy building it very gradually and sort of keeping it going, or are you looking to expand in another direction with it?
Yeah, that's a great question. So we spent I spent all last year just basically rebuilding it because the site was totally down. So me and a tech guy just spent a lot of hours just, fixing everything, using AI to improve the algorithm. This year um, has been a lot more building on top of that. So we're launching a new version of the site probably in about 2 weeks. Where I'd say about 80% done. So we're just kind of triple check in and making sure there's no errors. And that's there weren't any changes to the algorithm. That's just more to kind of modernize it, make it more visually appealing. And then next year we're going to start adding some premium products, and we're going to charge for those. And yeah, we're just trying to, grow our user base, and basically, like, I'm trying to, give Main Street, a sophisticated tool for their toolbox. And if people want to use it, that's great. Or, however they want to fit it into their trading style, that's kind of what we're hoping to do. And just, give them another tool to fight back against Wall Street, because trading's so hard. And we talked about this on the call last week, but I think JP Morgan said that 90% of all US equity trading is done by algorithms and computers. So I think that's really hard if you're a retail trader. If you're trading against computers and all they know are numbers and there's no emotion involved, you're already at a disadvantage. And all these hedge funds, institutional offices, like any group of people that's running a major amount of money, they have a sophisticated algorithm like this, or they borrow somebody else's. So, you know, if you don't have access to that, it's not a level playing field. So what we're trying to do is give people access to a sophisticated tool, because if you're on your own and you're, working 40 hours a week, taking care of your family, coaching your kids' little league team, you're not going to have time to do this at a high level. And this is a hard game. It's really hard to do if you're not putting effort into it. Like, bull markets are easy. You can just buy something and forget about it and come back in a year. But when you have this kind of choppiness that we had Friday and Monday and part of this week, that's when you can really get hurt. And that's in my opinion the difference between somebody who's doing this for fun and somebody who's doing this for a living. So like trying to give people access to a tool that'll help get them kind of more out of that amateur group and more into that advanced trader group to hopefully, I just hoping to help people increase their win rate. Like I can't trade for you. I don't want to trade for you, but I want to help people, you know, beat the system, because I just read all these horror stories online and in Reddit, and just people don't know what they're doing. And I've seen people. I took out another mortgage on my house. I bet my kid's college fund. I did whatever, and
Ouch. Yeah.
those are not setbacks you bounce back from. Like I made a bad private placement. I lost 10K. I learned my lesson. I moved on. It didn't, that hurt. 10K is not insignificant amount of money, but that didn't mean I lost my house or I lost my car or I couldn't feed myself. Like, and that's where I think in today's world, with just how hard inflation is and how expensive everyday life is, I think people are turning to trading to try to make extra money because they can't work any more hours in their week and be a good spouse or be a good parent.
And it's tough as well because, what the world is doing is speeding everything up, making us,
Yep.
a lot of people anyway, more desperate because, one source of income is not enough, or, your partner loses his or her job and that's gone, that income. And so, as you say, people are turning to things like trading because it's extra money. You can do it from home. You don't have another boss. So you, if you're not experienced enough, if you haven't really got adequate tuition, or your temperament's not the best and you're stressed and what have you, you become quickly almost addicted to it, if not addicted to it. And you see that as a way out.
It turns into gambling.
Yeah, it turns into gambling very fast because you're under this pressure all the time. And you go on social media and it just seems like easy. Everyone's making money. No one's really, very, very few people are publishing, I just was 40K today, that on the whole, it's people who are boasting about making 10K this week or whatever, So the impression is that this is easy. I can do this. This guy looks just like anyone else. I can do this.
Yep.
But of course, as we know, a win, 1 week is not a win every 12 months, so that's the problem with trading,
It's a humbling game.
Yes, it's difficult to begin with, but the speed at which we live makes it, in some sense, for the retail trader, even harder because it whips up the emotions more.
Yeah, no, I 100% agree. And AI is only speeding everything up. Like the world's not slowing down. So you either adapt in this game or you die. And, this is, so I was a user of the site for, I think, 3 years before I bought it. So I've been using the site for 5 years now. And that's these past 5 years, that's the best my trading's been. And that's because I've, incorporated the site's data into my process, and I've just stayed disciplined. And, like I said, I try to hit singles, doubles, and if the market setup is right and I hit a home run, that's great. But I'm not taking these crazy risks, and I'm not putting my entire portfolio in a micro cap because somebody on Twitter says, "Oh, I think they're going to do this or they're going to do that," and that's great. That could 100x you, and then you can retire. But 99% of the time, that's going to zero, and you're going to be out whatever you put in.
Yeah, gosh, yeah, absolutely true. And just last point, really, just a sense of how you manage your trading overall. When you were, like a teenager, young guy, you were trading and taking the money out as income. Are you with your trading account, your kind of daily trading account? Are you using that mainly for income, like daily expenses, or do you plow it all back in to your balance and just keep on building it?
Depends what's going on. Like if we're have some expense come up, then yeah, I take some money out. But for the most part, I would say I try to keep probably 75% of it in, because it's easier to trade when you have more money, if that makes sense, because then you can place more bets. And this is what it is you place more bets, you can spread your risk out. So like back when I was in college, my time frame was 6 months or a year. I was just, in survival mode, and it's hard to start from zero. And that's when people blow up their account, you lose all that momentum. So now I'm very, diligent about when I take money out, and we try to live simple so I don't need to use that to draw down. Because like I said, I'm just trying to compound that. Like if I can keep doing what I've been doing for the next 10, 20, 30 years, I'm going to be in a really great place. And, there's, like you said, there's no boss. I make my own schedule. Like I can do, if there's any reason that I don't want to trade that day, I don't have to trade, and I can set my stop loss, and I can, walk away from the market if I want to take my son to the beach, or we go play golf, or we go do whatever. Like I have the freedom to do that, where, I don't want to take these risks where I got to be at my computer every day from 7 to 5 a.m.
Yeah. It's not good for your health, I think.
No, it's hard. Trading's
It's
a
just
grind.
anxious all the time, even if it's low level anxiety, there's always this kind of thing. I need to check this. I need to check this. I need to check this. It's not a great way to live, I think.
No, if you can't unplug, like if you're always running, even if it's not high intensity, but like if you go for a run and you're always running a marathon and you're always like at cruising speed, you're eventually the wheels are going to fall off. Like you need to find time to take your breaks, take your rest. Like, we'll go away for long weekends here and there, and I don't even think about the market from Thursday when I leave until, Sunday night when we get back, cuz it just I need that mental break, and that helps keep me, gives me that refresher and that break to keep me sharp over the long run.
Just to wind up, your system and the website you mentioned, is that a subscriber model, or how do people join?
It's free. They just go to the site, sign up, make an account. Eventually, we'll put some of it behind a paywall, but I want to keep it, affordable. So people, like some of these trading systems I'm seeing charge, 150, $300 a month. Like we don't want to be in that business, but I don't want to make it seem cheap that it's not a good product. So eventually we will charge like a monthly subscription for the premium stuff, but I want to make this affordable so people can, I don't want people to not be able to afford it and then they blow up their account. Like that's not the purpose of this. I'm trying to build a community. Like we have a Reddit group going. I'm starting to post more on X. Like we're trying to build kind of a community of, like-minded traders to try to help each other. And I've learned a lot from my users in the past year and a half, 2 years, that have made me a better trader. So like I'm trying to, I think, a lot of times is when you network and what you put into that relationship is what you're going to get out of it. And I've, built some really great relationships with some of these users, and, we'll text each other, we'll email each other with different things. Hey, I'm seeing this, I'm seeing that. And we're just helping each other win. And that, that's nice from a money perspective, but it also like, it feels good too. Like it's nice to help people, and it's nice to know that people want to help me. And that's kind of been like the nice part about this that I didn't really think about when I first bought it. Like I originally bought it because I was like, if I don't have this, my trading's gonna suffer. So if I just gotta buy it, and if I just run it for myself, I'll still make money because I need it for my trading. So I bought it originally for selfish reasons, just because I wanted it and needed to have it. And then once I got it up and running, and the original users, like we have a very loyal user base who have been using it for a long time. Like the amount of emails I got that first month when we were back up and running with no marketing, like didn't spread the word, just put the site up. I was just using it for my own trading. And just the amount of people who reached out like, oh my God, this is great. This is my favorite site. I'm so glad it's back. I'm like, oh wow, like maybe I can, build something here. And that's been fun. Like just building something, and I don't know where it's going to go, but I'm kind of okay with that. Like it's just been fun. And that's kind of like the main thing is this has been a hobby, and I've really enjoyed it so far.
Sounds good to me. We should wrap up here, Kevin. Thanks.
Yeah, no, it sounds great. It's been a great interview. Thank you for having me on.
Absolutely. Cool.